Welcome, everybody, to Kira Gets Real Estate. So glad you're joining us. So today we have some great questions that potential buyers sent in. So that's awesome. I first just want to tell you that I am not a lawyer, so I cannot give you legal advice. I am not an accountant. I cannot give you tax advice. I can give you real estate advice, and I can point you in the direction of the people that can help you with tax and legal advice. And I always recommend that when you are taking part of such a really large financial transaction, that you do consult those professionals in your life, because it can have implications that maybe you're not aware of. So that is my spiel about that. But on to our first question. So the question is, what does my mortgage payment include? This is such a great question. It varies depending on your mortgage type, depending some of the choices you've made. So definitely check with your lender to get the details for your payment. And there may be options with that. Often a first-time buyer, their payment includes principal and interest. Well, any mortgage payment is going to include at least principal and interest. So that means say you are borrowing $200,000 to purchase this house, that $200,000 divided over 30 years typically, plus the interest you will pay on that. Lenders are now required at closing to disclose what that actually adds up to, which is a pretty daunting number when you look at how much interest you pay on your mortgage over 30 years. So definitely, if you can make additional payments or any amount towards principal, it always helps you, and you get the most benefit from that earlier on. So if you can make even one extra payment a year or a couple $100 extra to principal a month, it will really substantially reduce your interest over the life of the loan, because the way the payments work, like your first payment is mostly interest, less principal. And as it goes towards the end of your mortgage, in year 25, your payment is mostly principal, less interest, right? So the banks do this. They lend money to make money, right? It's a business. They're not doing this just to help you, unfortunately. So that ensures that it financially makes sense for them to lend you this money, because most people do not live in their house for 30 years. So they want to make sure it makes sense for them. So anyway, if you have detailed questions about that, I'm happy to go over it with you in terms of looking at you can go to mortgagecalculator.com and put in numbers, and it will show you the amortization. You can really nerd out on it like me. So that's the first part of the answer, is mortgage and interest are included in the payment. Now, oftentimes a home buyer will also escrow their insurance and their taxes. Some mortgage types and some lenders require that. Some do not. So that you may have a choice, you may not. I think it's great to do it, even if you have a choice. It's really a nice way to not have to save up that extra money to just when the taxes are due, they get paid. You don't have to think about it. So how that works is your insurance, for your homeowner's insurance, they divide however much it is over 12 months, and 1/12 of it is added into your payment each month. So they collect 1/12 of it from you each month with your mortgage payment, and they just hold it in an escrow account. And then when your insurance comes due, they pay it. So you are paying it technically because it's your money paying your bill, but because they are taking it from you in 1/12 increments, it is less daunting. And you don't have to save up for that. And the same thing happens with taxes. So your land taxes and your school taxes, the same thing happens. Take 1/12 from you every month of each of those. And when they're due, they pay those for you. And that is a reason why, even if you have a fixed rate mortgage, meaning your interest rate doesn't change, which most people do, your payment can fluctuate, because over time, if you live in your house, say for 10 years, your real estate taxes, your school taxes and land taxes, and your homeowner's insurance are probably going to go up. And so as those amounts increase, then your mortgage company has to adjust how much money they're getting from you each month to cover those costs. So your total payment can go up if you have your insurance and taxes escrowed. Another piece of it that you may have in your mortgage payment is PMI, or private mortgage insurance. There is a blog post on my website if you really want to get in the weeds about it. private mortgage insurance, people don't get because they want to. They get it because they have to. It protects the lender. So say you get a mortgage for $200,000, or say your purchase price is $200,000 and you are only putting 5% down on the loan, right? So because that is a very small gap, there's a small margin of error there. The bank doesn't feel super warm and fuzzy about that risk level. So they have you purchase private mortgage insurance. And so if you are putting down 20% or more of the purchase price, then you typically do not need private mortgage insurance because there is more wiggle room on the bank's end, right? They feel like you're a more qualified buyer. You had the funds to do that. There's less risk on their part that you might default on the mortgage because they do not want to own houses. They want to lend on houses and be paid back. So they do not want you to go into foreclosure. And so the less risk of foreclosure for them, the better. So if you put 20% down or more, you don't need private mortgage insurance. If you didn't put 20% down, then they will require you to pay for private mortgage insurance, but it protects them in the situation if you were to default on the loan. So those are really the main components of what your mortgage payment consists of. Okay, our next question is, how does my interest rate affect my mortgage payment? This is one that many people are learning about in a harsh way right now. If they purchased a house, maybe when interest rates were incredibly low, like 2.5% to 3%, and now they're trying to upsize or downsize and looking at houses with interest rates double, even more than double in some situations, can drastically affect your monthly mortgage payment because how much interest you're paying each month on the money you borrowed is higher if your interest rate is higher. So when a mortgage company pre-qualifies somebody, they are looking at your monthly expenses. There's other factors, but the amount they will lend to you is typically based on your monthly debt to income ratio, meaning how much money you bring in each month and how much goes out each month, right? So it can affect how much not only you pay monthly in your mortgage payment, but it can also drastically affect how much you can actually be pre-qualified for. If the interest rate is higher, then that monthly payment is higher, and that means you can buy less house for the same monthly payment. So definitely it affects it greatly. There are, mortgage calculators where you can figure out what that payment looks like approximately. Definitely talk to your lender for specifics for your mortgage. You do want to make sure that you have every factor involved in there before making a decision, but your interest rate definitely affects your mortgage payment substantially. Here's a great question that we got online. And I feel like when you do this every day, you forget that people don't know about it, which why would they, right? So the question is, how long does it take to close? How long does it actually take to buy a house once you've chosen a house and you're under contract? Typically, in our market, it takes about 8 to 10 weeks to close. And it can vary on a number of factors. It can vary on the type of mortgage you're getting. If you are getting a government loan, there are just a few more hoops to jump through. And so that probably would be closer to the 9 to 10 week range. If you're getting a conventional loan with, 20% down, there are a little bit less hoops to jump through. So typically you can close closer to the 8-week range. If you are able to give a cash offer, that is certainly the quickest. And that is typically around 4 to 5 weeks, but other factors do affect that. So if you're getting a mortgage, the time it takes to get the appraisal ordered, scheduled, get the results back, if there's any items that need to be looked at after that, all of those pieces can delay things. And then even if you have a cash offer, typically you're still going to have a home inspection. And so the time frame of how long does it take to get the home inspection scheduled is after you have it scheduled, are you quickly saying, okay, yes, I'm fine and moving forward? Or are you saying, oh, I'd like to ask for some things. I need time to think about that. And then the seller maybe is thinking also on their end. So it depends how long those items get settled before the attorneys move forward and get everything situated. So it does vary, but I would say if you're getting a mortgage, plan on 8 to 10 weeks. And then if time is important to you, definitely as soon as your lender asks you for documents or asks you for updated statements or whatever they need, the fastest you can get that to them, the better, because every sort of request, everything is on hold. right? So if they need a photo of a check or they need an updated statement, your file is sitting there typically until they get it. And then it moves on to the next step. So sometimes I'll have buyers be like, oh, well, we're not closing for 8 more weeks. I'll get it to them eventually. Well, if you do that, you are not closing in 8 weeks because that will hold up the process. So just be aware that if they're asking you for things, it's because they need that to move forward. Okay, I had a buyer ask, what are closing costs and how much should I expect to pay? The real question is typically, what are the costs I'm paying for and how much cash to close will I need? So I always encourage buyers when they're meeting with their lender to ask how much cash to close they will need, because closing costs can mean different things to different people. To some lender, they may take that as just the fees that they are getting, but you have additional costs. Their fees are typically the smallest amount of money that you're bringing to the table at closing. So it's very important to have a good sense of total cash to close, because that includes your down payment amount, your lender fees, your appraisal, your insurance, your funding of the escrow account, your prorated taxes, and like sometimes there's prorated water bills and sewer bills. There's a number of things that come into play in that amount. The sooner in the process that you have a general idea of what that is, the better. And definitely some lenders are better than others in terms of just being really transparent upfront with, well, this is how much you're going to need. I would definitely recommend that you work with somebody who is willing to do that, because it's so vital to kind of have an idea. If you're thinking, I only need 5% down, that can be a significantly different number than your total cash to close. A lot of the things you're paying at closing actually are benefiting you. So, for example, the escrow account, funding the escrow. We talked about how, if you have an escrow account with your mortgage payment, that 1/12 of each insurance and taxes goes into that so that they can be paid when needed. Well, to get the ball rolling, the escrow account has to be funded at closing. You're going to need to pay 1 year's homeowner's insurance in advance because it has to be insured prior to closing so that the bank is protected, but also so you're protected. It's paid upfront to your insurance company, if you directly. And then that 1/12 starts adding up so that in 1 year, they will have the full amount again to pay it. That is a pretty straightforward concept. The taxes are a little bit different because they don't start the day you buy the house, right? They run on their own calendar year. So land taxes are a January to December time frame. School taxes are extra interesting because they're actually July to June, but they're due in September. I don't know why they make it extra complicated, but it's a strange time frame. So what the attorneys will do is they'll figure out, you're buying the house in May, the seller has paid the taxes for the year, right? And so then they will prorate it, figure out like, okay, per day, how much do you owe the seller back? Because you will live there during that time, not them. And so you'll owe that back to the seller. And then they will also figure out, in order to have enough money to pay the taxes when they're due next, because it won't be 12 months, it might be 7 months or it might be 3 months. They have to make sure that that escrow account is going to have the money in it when the taxes come due. So part of your closing costs, cash to close, is going to be funding that escrow account with however much money that is. It's easier when you can see the breakdown, I promise. If you ask your lender for how much cash to close, ask them to see a breakdown, because then we can look at the numbers and go, okay, yes, I see now where that money is coming from. And if I'm going to have the cash, because a number of items are prorated based on the closing date, they cannot give you an exact number until closing is scheduled, which is very frustrating. And I've been there. I understand when you are a first-time buyer and money is tight, not having an exact amount is a little hard, but they can give you an estimate. And that estimate is usually pretty good. If you maybe just round up a little to make sure that you're covered, hopefully it will come in a little less and you'll be all set. So what do you do if you talk to your lender, you say, can you give me an estimate of what my cash to close would be? And they say it's $20,000. You say, I don't have $20,000. I have $10,000. There are some options. Some loan types, many loan types, most loan types allow for something called seller concessions. And that is a way for a buyer to borrow above what the seller is going to receive from the sale in order to cover some of your closing costs. So if if your cash to close is $20,000 and you only have $10,000, you could structure your offer in such a way that you get $10,000 back towards your costs. That is why when you start looking at houses and start talking about making an offer, your agent is going to want to know, have you had these conversations with your lender? Because it's not the exciting part. I get that. But it's so important because if you don't think about how much cash to close you need in advance and how you're going to come up with those funds, then what happens is we end up in a situation where we're scrambling. If you've made an offer and then you say, oh man, I don't have $15,000, then we're going backwards and asking the seller for concessions, and they may say no because they may be irritated, or they may be like, oh, I thought you were a solid buyer. Now I'm concerned. It's just better to have all the information up front so that we can structure your offer in such a way that gets you what you need, but also is appealing to the seller. You would be shocked at how many times a buyer comes to me and says, yep, I've met with a lender. I'm good to go. This is how much I can purchase. I want to look at houses. And they haven't actually gotten an idea from their lender of how much cash they need. That is concerning because from the buyer's perspective, it's concerning because if you want to know how much cash you're going to need for closing, so that you can plan for that, or so that you can save up for that if you're not in a position to do that yet. And also from a lender's perspective, I would think that they would want to know that their buyer can actually move forward and close on a house and has the funds to do so. So definitely when you are speaking with your lender, ask for an estimate of how much cash to close you need, ask for a breakdown of it. That way we can look at it together and say, okay, yes, I have that. I don't need concessions, or I have some of that and I'd like to ask for concessions, and we can come up with the best plan going forward. I love this question. I've never been asked this question until now. So the question is, what should I do right after I move in? And I think that's such a great question. Most people don't think about the after, right? They're excited. They ask when they can move in. They ask when they're going to get the keys. They ask all of those things. No one's ever asked me what they should do after they move in. My number one would be change the locks. Because even if the sellers are like, here's our 4 keys from our family members, you just never know if they had given a key to a babysitter or to the dog sitter or to the neighbor, whatever. You just don't know. And even if they haven't, most people in the North Country do not change the locks when they move. So somebody could be out there with a key from like 4 years ago or 15 years ago. Just change your locks. It's not that expensive and it will bring you some peace of mind. The other things, many of these you actually should do prior to moving in, like get your trash service set up, call about internet. The utilities typically have to be put in your name for the day of closing. So usually your agent and your attorney are asking you, make sure you put the electricity in your name, water and sewer, all of those good things. But if you didn't, then as soon as you move in is the next best time. And honestly, I would recommend people, if you think you're going to be like painting a room or redoing floors or something like that, I would do that before you move in, or maybe put your stuff in the garage or in the basement or in a spare room. And that's a great opportunity to be able to paint without all your stuff in the way. So if that's something on your list of like, oh, we want to update these colors, I would try, if possible, to do that before you place all your things, because it's just easier that way logistically. Thank you all so much for tuning in today. I really appreciate you listening. If you have any real estate questions, I would love to hear from you. If you go to my website, which is kirawitherwax.com, there is a place to submit your questions. I won't call you out by name unless you want me to. And it really is just helpful for me to be able to provide information that is valuable to the listeners. So definitely reach out if you have questions, anything you're thinking about. There are no dumb questions, I assure you. And I hope you all have a great day, a great week. Thanks so much for tuning in, and I will see you soon.